All right. Welcome back, everyone. Another episode of Chart Talk. Again, market closed today at new all-time highs. Again, very crazy transition from what we were used to for most of the year. We started the year out at highs, chopped around. We had this correction that took out, some significant major pivot lows, such as, SPY 650. So it did seem, kind of doom and gloom going into April. And then we had this, massive reversal, most aggressive, V bottom I've personally ever seen. And, there were some stats, a different person put together that, going back to the 1950s, this is in the top 10 percentile of, V bottom recoveries, more than a, 12% rally off of lows. And, just insane price action. Again, tech and semis has been the major, leader in this rally. And it really just took, massive shakeouts before, the massive breakout that followed. This is the tech sector. Here's all-time highs. But, for most of 2026, it looked pretty bleak. We had, pivot lows breaking, market Hing over. We had that massive shakeout. And what no one really saw coming, myself included, was this extremely aggressive V bottom off of lows, which, it's, well, let me draw this. Here's the V. Typically, you'll see a V bottom recover like this, where if it took, 3 months to pull in, 2 or 3 months, maybe 4 months to, climb its way back to highs, but not this market, just, higher and higher. And path of least resistance higher. Again, the key theme, this vertical run, and we're going to look over a couple of the strong sectors, cannot sustain itself for the long term. But in the short term, we got very good technical action here for tech. This is the prior all-time high, this 100 level, or 700 because they split it. Gaps above it, retests, and turns that resistance area into currently support. So for now, you're in VGT, 99.89 stop. We'll keep you in for the run higher. And if it's going to roll over, you'll get out the top of the move. So again, extremely strong price action in the overall markets. Kind of goes without saying. Measured move of this, pullback sends us pretty much to 770 in the S&P. Again, not saying that, it's going to get there in a vertical straight line, but this is the short-term target of this correction and rally back to high. So, if I had to flip a coin, I would, say we're going to see 770, much more likely than we're going to see a test of those 630 lows from a few weeks ago. So again, Dow 30 names, 30 largest names in the US, definitely lagging a bit. Again, we can see this more gradual kind of V bottom here as it just kind of climbs back to highs. This is going to be short-term resistance. And again, the Qs really, breaking out of this massive, massive bull flag here. So again, this target is, up here around 700. This is like the measured move of the current range that it's in. Again, a lot of these big numbers, 600, 700, 800, tend to be psychological numbers. So for now, for the Qs, 700 is going to be that short-term target based on the range here that formed. You have a 60-point range here. One-to-one target would be around that 700 area. So, definitely a lot of strength. The tech sector, again, we're seeing this megaphone pattern forming in the tech sector. We can see these trend lines, it's broadening pattern. Again, should expect to see this pattern continue to hold up, where tech eventually flags out, pushes through 200, and eventually tags upper resistance trend line. Again, REITs, massive runoff of lows, but again, still broadly very much range bound. Again, all-time highs, or not all-time highs, but 52-week highs through this 100 area. Been basing out, for more than a year now. So REITs really haven't woken up yet. Again, massive short-term rally, but still in consolidation mode. So the real breakout in REITs will be that break of 100. again, semis, defying laws of gravity with the rally that it's been on. Again, it is getting a bit frothy up here. It does remind me a lot of how, again, I'm showing a weekly chart here, and I can't show an identical side by side, but just visually, we can see this, 1,000% rally in this semiconductor sector in, 3 years. Now, if we look at gold had, a similar run up. And if I can, show, let me see if I can add a comparison here. So percentage-wise, semis are definitely up a bit more in that, 3-year span. But you can see here, this blue line is going to be the semiconductor sector. This, weekly chart of gold is, the gold price action. Now, what gold had did earlier this year when it ran up to $5,000 an ounce, that's when you saw the lines of people outside, jewelry stores buying physical bullion, and that was the short-term top for, the pullback. Now, for semis, not saying that today's the top or tomorrow's the top, but this is a monster move. This is now when you're starting to see a lot more people on like social media talking about trying to buy a lot of these semiconductor names. It's gone up 1,000% in a couple of years, and extremely, steep trend line. And we've seen, even again, I'm not going to, car is not a semiconductor. This is a short squeeze, but when these trend lines get extremely vertical, you can see this is the trend line. And then as it gets more aggressive, you can't even draw a trend line because it's just nearly vertical. And when those trend lines get very aggressive, once they do start to break, they break very quickly. Now, again, this car is the most extreme example of this. And again, it's a short squeeze, but when it was here, everyone's thinking is it's going to 1,000. When it's here, move is dead. Car, Avis is horrible stock. Who cares about it? And it goes back to zero. So as long as semis continue higher, just normal human psychology, we're going to expect this to continue higher, and everything is great in the world. But once this very steep trend line starts to break, whenever that time happens, the reversion back to the mean here is a big pullback. And that's when the bad news starts to come. So we saw like some, we can call it profit taking, and we'll look through a couple of quick semi names. So you have the, Micron up 5% today, breaking out, not really extended. This is a technical breakout. This Micron chart, textbook, nothing to really lose sleep over. NVIDIA finally breaking out to new all-time highs, which finally, this name has been flagging out since last year, finally pushing those highs. Very good sign. Intel, again, I had gotten out of a large position in Intel, but into before earnings, wasn't looking for that coin flip. And again, it had a monster run here, from 20 to nearly 70 in the past 18 months. I was locking in some gains in Intel, but we're seeing some other weakness. AMD, little sell off today, and again, AMD extremely parabolic. Nice base breakout here. This was the technical entry. This is the patterns that we look for are these base breaks. This is a technical entry. Up here, when people are trying to buy it, this is when people are chasing. So our buddy Nico has been in this AMD for quite a bit. And we were talking about, when these names keep getting these parabolic moves, you just want to look to raise those stops versus the low a day. And AMD, triggered that low a day stop today where you could be taking some profits again. Things up $100 in 2 weeks. So again, we can see, a lot of these semi names have been on these, insane runs, 30, 40% gains in 2 weeks. This ADI, 300 to 400, 30% gain. Again, ASML, still bull flagging, looks amazing, doesn't look extended, very technical pattern. So it's not that, the semi move is over. There's still technical setups, but some of the names that have already gone, AVGO, up 130 points, 150 points in 2 weeks. There's not much left to squeeze out of names like this. So you have to just, be aware of that and look for those technical setups. So there are still some in, the semiconductor space. Skyworks through the 64, textbook base break and kind of a weaker name in the semi space overall. So again, you kind of want to focus on the leaders here, but you don't want to be blindly buying them after, 100% run ups in a couple of months. But ASML, big run up, but flagging out, very textbook bull flag. So one to keep an eye on. But again, semi sector and tech has just been, on fire. So let's move on to some of the sectors we want to be, keeping an eye on and some sectors to avoid. So again, materials, nice little flag here. Again, much more calm, rally back to these prior highs, nice, more normal V bottom, nice consolidation, not extremely extended. And again, short-term target is just to retest the highs. Industrials, same thing, V bottoms off lows. Again, for most of these sectors, it's all going to be the retest of prior all-time highs is going to be the targets for these sectors where they're going to act as resistance. Financials, again, slower V bottom, normal price action that we expect to see when we see these V bottoms. And, we're just drawing it here for the newsletter, expecting some sideways action for them to eventually climb back to highs. Same thing with consumer discretionaries, a little bit more aggressive of a trend line, but you can still see the V bottom. And again, path of least resistance is back to these prior highs. Very unlikely we're going to see, a retest lows before then. In sectors that have been somewhat weak, biotech still flagging out here. This is a, pretty big breakout level, looks very similar to, small caps that had been breaking out. So this is, a similar area of where like biotechs are currently. They're, battling out that all-time high breakout area. And as we can see, it's taken small caps a bit, but they finally start to get away and, break out higher from that area. So biotech's not super weak, not a massive avoid, because it's an amazing macro pattern. It's just going to take some time. Again, I have to even, kind of zoom out to a monthly to make this a little bit more easy for you guys to see, this key resistance level, big flag here. So really just, waiting for the 180 break of all-time highs is going to be when, these biotechs start to wake back up. Consumer staples, looks like a, pretty broad bear flag, definitely an avoid. Energy, again, we're talking about like semis, in the final innings of its short-term rally, when energy was, hitting 180 in the VDE sector, and, it looked like it couldn't go anything but higher. And then once you start to break that trend, very quickly, the price action changes the temperature in the most love space. So again, energy had that love, going into, the beginning of April. They've slowly started to put in, lower highs and lower lows, starting to base out, not a dramatic breakdown back to their, 2026 lows, but losing some steam. And that's something where for the semi sector, at some point when this trend line breaks, we could expect similar price action to what VDE did. You see some lower highs, starts to pull back in, retrace, 30% of the move. That's where, the semi sector feels like it's, somewhere here in this rally where could be some more in the tank, but the easy part is way behind. Looking to get in now, often you have far more risk than reward. And then the last but not least, sector-wise, again, healthcare, very much an avoid, breaking support, Hing over, not participating in this rally, not something you want to be, step in front of the train. So, tech, Qs, Semis in the names that haven't run up already, 50 to 100%. Definitely worth keeping an eye on. We can run through, a couple of the quick names. Setting up. Again, nice little bull flag here in JP Morgan through this 320. Again, Tesla, consumer discretionary sector, somewhat strong. This Tesla still very weak, very clear breakdown stage. We can start to see the early base starting to form here. I'm going to just change these colors. So again, red, avoid. Orange is, the light's about to turn red. So Tesla's still very much in a breakdown stage. We can start to see a bit of a base kind of forming here, where we see some sideways price action. But 400 is the real entry here. 330 still the pivot low, still too wide, still too weak. But give it 3 or 6 months, and we'll have that 400 breakout, back to highs. Meta, 680 base break, setting up pretty nicely here versus 650. Again, for that eventual climb back to these 800 all-time highs. So looking good here. Again, it's taken a couple months, but definitely building a nice pattern here. Again, this AMSC, everybody, Adrian's top ideas through 35, working out great so far. Lynn, blue sky breakout. Everybody, Chad got this one today through that 511. Might need, another couple days to set up here, but again, very tight, all-time highs. Nothing more you can ask for. Textbook pattern, looks phenomenal through that 511 versus 500 for now. Let's see what else we got. NVT, blue sky breakout through 120, working out nicely. COGT, one of Eric's top ideas. Very nice flag forming here for this break through 38 versus 36, 35. Again, this Cisco made that breakout through 80 a few weeks ago. Pushing through new all-time highs. Still looks great. No reason to get out. Generon, keeping a close eye on this break here through this 767. Amazon, our buddy Tim, still in this one. Again, we're talking about these bases. The entry was through here. And now is when he can continue to raise stops and look to take profits, with a 50-point cushion. So these are the entries. And these are when you can start to think to sell. You don't want to be looking to buy here when you had this technical entry down here. So shout out to Tim. Again, ASML, semiconductors, if you need to be in a semi name through 1500 versus 1400, relatively tight risk here. Measured moves to around 1750 for this broader flag. Again, AMD, our buddy Nico hopefully taking some profits today. We were keeping an eye on this CYTK, but given today's close and Pharma being a little bit weak, take that one off the radar. Again, this ARM. Again, another one of these very parabolic moves. And again, 100 to 250 in a month. Great time to be taking profits once it's taking out that prior low of day. And that was the key example. We talked about this car the last 2 chart talks. And the key lesson was, if you're in a winner, you don't know how to get out. Again, at any point, if you bought this car at any time through the high of day, again, I'm just going to draw some, high of day entries. Again, it's basically every candle. You'll get the idea. And when you're in these winners and you don't know how to get out of them, simple rule of thumb is to just trail by the prior low of day. And that will determine your out. So if you got in this day, you put your stop here below the prior low of day, and each subsequent day, you continue to raise it. So say you bought it this day. Your stop is here. The next day, your stop is here. Next day, Stop is here. And again, you keep raising the stop to the prior low a day, and eventually you get stopped out. So even if you bought it, April 20th through 500, you were involved for the move to 800 and you got stopped out at 560. You still made 10%, but you were in the position to make money and the stock told you when to get out. So that's something with, some of these names, ARM, AMD, that have gone on these, insanely parabolic runs. This trend line is basically vertical. Can't even draw the trend line. When you have a systematic way to know when to get out, it's not do I sell it here? Or should I ask a friend? Do I go on Twitter? You have a systematic approach, okay, things up 100 points in 5 days. It's going to keep going higher. It's going to keep trading higher. If it's going to go lower, it's going to take out that low a day. And that's going to be the reason for that person to, hit the button or have the sell stop that will automatically do it for them. So again, if you're in semis, you've been in for 2 weeks plus, congrats, amazing move. These are kind of like once in a decade moves for sectors. Very rarely does a sector increase by 30 to 40% in 2 weeks. Definitely doesn't happen. So congrats, all those in semis. Again, market is pointing north. Path of least resistance is higher. Continue to hold on. If you are nervous about the market and where it's at, any break below 700 in the S&P could be a reason. If you're looking for one to sell, that would be the time to do it. So you can set an alert, 700, raise some cash. That would be the time to do it. But anytime we get above new highs, the market tends to continue higher. For me, again, my target for S&P by year end is around 770. So definitely think there's still more room in the tank for the market. I don't think it's going to get there tomorrow, but by end of year, it does seem like a realistic target. So hope you guys learned something useful from this, and we'll see you next week.